Hello, everyone. My name's Dean. Let's talk crypto. This is where you subscribe for daily Bitcoin updates and technical analysis. We track the price of Bitcoin as a proxy for the cryptocurrency markets at large. Today is October 28th, 2021. And Bitcoin is looking like it's in a correction. I'm going to start out today on the monthly chart. I know for those of you who are subscribed to the channel, you'll know my thesis as of a few days ago. I am preparing to sell everything imminently, right? I'm unlocking things as we speak, and the staked projects that I have, and I'm selling everything because I believe that we are at a top, a macro top. I do not believe that the bull run is over, but I believe we are about to have a very steep correction in the market and about a 60% correction in Bitcoin. Let me see, from here down to here. Yeah, 60%, something like that. All right. And so if that's 60% in Bitcoin, that could be 90% in your favorite altcoins. So let's get started. We're on the monthly chart. As you can see very clearly, you have your waves here. And it looks very, very ominous. Let's say you don't know how to count the waves, okay? What is very worrisome, if you know anything about technical analysis, if you know anything about RSI, what's very worrisome about this chart? Look at this high here, right? In the market. Look at this high here. This is the April high of 64K. And look how it's represented in the stochastic RSI. It's a top. Look at the high that we just made here, the new all-time high of 67. Look at where it's represented on the stochastic RSI. It's all the way at the bottom, okay? And if you know, this is severe bearish divergence, okay? And for those of you who may not know what bearish divergence is, it's when there's a discrepancy between price action and RSI, okay? Here you have it. And this, I don't think there's a clearer sort of indication to what I'm saying. There's literally not a simpler and clearer indication to what I'm saying. If I'm stand corrected, I stand corrected. Obviously, I'd rather be rich than right, and I'm doing all of this so that I can increase my cryptocurrency holdings, so I can maximize my gains. This is why I'm tracking Bitcoin every day. This is why I'm sharing it with you. I share it with you because it's a passion of mine, okay? But I can't think of a more clear explanation as to what I've been saying for the past few days. Look at how stark this bearish divergence is on the monthly time frame, not the daily, not the weekly, the monthly. And if you know anything, absolutely anything about technical analysis, you know that the higher the time frame, the more confident, the more sort of reliable the results, okay? So this is what I wanted to start with, the monthly time frame. I just wanted to show you all that, so please beware. I am personally selling all of my bags over here at the top. I want to maximize my cryptocurrency holdings. I want to sell at the top, and I want to buy back again once we get to the bottom, which is what I think will be about 24.9 or something like that. Between 24.9 and 29.5, I believe, if my memory serves. But in any case, I want to buy the bottom in not just Bitcoin, but any other assets. And in that way, I will have multiplied considerably all of my holdings, right? And I hope you can do the same. If this makes sense to you, if you can if you concur with my analysis, then and you decide to do the same, I wish you the best. I hope you get as much money as possible. I mean, look at the volume as well. And this is important. This whole time we've been going up right here, right? Look at the volume. This is another divergence that's very important. Volume divergence. Not enough people look at volume, right? This is very Wyckofian. It's very Gann, right? Not that many people study Gann. Not that many people study Wyckoff seriously. But here on this channel, we're serious about technical analysis. We have rudimentary understanding of Gann analysis. We have rudimentary understanding of Wyckoff analysis, though we specialize in Elliott wave theory, which we use on a daily basis. But look at that volume. That's volume divergence. This is another reason why I'm saying what I'm saying. It is clear as day to me. There's like, if you can prove me wrong, go ahead and prove me wrong. Again, I'd rather be rich than right. All right, let's move on. Short-term analysis. What's it look like? We're going to go into the 15-minute time frame. I'm going to erase these just to keep our chart clean. And let's do this. Boom, boom, boom. Okay, what do we have here? Okay, so that's our all-time high over here, right? I count one. No. This is a reversal right here, right? Because remember, price doesn't just turn around and reverse. If it was in an uptrend, it doesn't just turn around and reverse. What do you need? You need an ABC correction, right? And that'll give you kind of a means of turning around, pivoting. So this is your pivot, A, B, C, and that C wave is the first wave. 1, 2, 3, 4, 5 waves down, right? And then 4, 5. Okay, so that was, sorry, I'm confusing myself even. Let's see. 1, 2, 3, 4, 5. That's 5. And then you have your A, B, C, right? And then you have, this is basically the end of your wave 1. So you have your A, B, C. And then this is your wave 2 that just hit, right? Your wave 2. And let's confirm this. We know that the wave 2 cannot exceed the 618 of the wave 1, pulling the fibs on the top of wave 1. And we see, let's turn the magnet off. And there we go. There's our level, respected. The 618 was on this chart, Bitstamp. Let me reduce this here. It's at 64095, right? We're over here. Now, let's actually draw this out. Boom. It actually ended here, if we want to be precise, and we're precise here. Precision is part of our calling card. 2 and 3 hasn't yet to begin, so let's just boom, boom, boom. Let's put them in because we don't actually care about that just yet. So let's just move them out of the way. Okay. So 2 is up here, but it's not finished yet. Okay, and this is something that's very important. When you zoom in on the smaller time frames, right? Let's say, all right, let's go into the daily, for instance, so I can make this point. And this is important. This is very important. And a lot of analysts fall prey to this, right? It's kind of like you're looking at one thing on one time frame, and it's the same thing that you're looking on another time frame, but the perspective has to change, and you have to understand what you're looking at. So when you're on smaller time frames, you see those ABC pivots, right? You see how price kind of does that B wave. It goes up and down and up again and down with that C wave, right? You don't see all of that detail when you're on the higher time frames. This is why I'm shifting to the higher time frame. Higher time frame, it's just very simple. It goes up and it goes down, no pivot, right? 2 wave, boom. Actually, we're still in the 2 wave, but you wouldn't know that, right? You wouldn't know that unless you zoom in. You would think we're in the 3-wave. We're actually not in the 3-wave. The only way we can represent, our waves and do our wave count, we have to pick a point. But we all know that, we basically pick the highest point and the lowest point, right? That's how we designate what the wave 1 was. Wave 1 actually technically ended here, not here, but because that was the A, B, that was the C wave of the A wave. C wave of the A wave? Oh, no, that was the A wave of the B wave, right here. So that's this low. But some people will just put 1 as ending here because it's the lowest. Do you understand what I'm saying? All I mean to say by this is when you zoom in, you don't have you have more detail, and that's important, especially when you're trading. You have to know one of the main sort of benefits of Elliott wave theory is you have a map of where you're at. You kind of have an idea what you're doing, where you are, right? And you don't have that if you're just using pattern analysis, right? You're kind of lost. It's like, okay, it's going up and down, but there's no reference, right? Here, we know we're still in our 2-wave. Why? We know we're still in our 2-wave for a couple reasons. One, this cannot be the 2-wave of the 3-wave. Let's say you thought this was the 3-wave already, starting down here, and you had 1, 2, 3, 4, 5. First of all, there's no 1, 2, 3, 4, 5 count here. You have a zigzag correction. You're still in a corrective phase here. You see, this is an A wave. This is a B wave. How do you know that? It's because clearly you don't see a 1, 2, 3, 4, 5, and this B wave violates any principles of a 1, 2, 3, 4, 5 correction, right? Or sorry, a 1, 2, 3, 4, 5 impulse. And then you go all the way down here. And if you measure that, I'm not going to sort of go into this detail in this video right now, but if you measure this sort of C wave of this A wave, you'll get a 1, 2, 3, 6 extension, I believe. Either 1, 2, 3, 6 or 2, 2, 3, 6. Let's see. Let's turn the magnet on. Let's turn this off. Is it that? Oh, whoops. That's not the... Here's the A wave right here. Right there. Right? Let's turn this magnet off. Okay. All right. It would go right there. No, that's not it. That's not it. That's not it. In any case, this is not 5 waves down. I'm sorry, I'm getting a little confused. I was looking at it and I was trying to work this out myself last night, but I don't exactly remember how I confirmed that it wasn't 1, 2, 3, 4, 5 impulse down and we weren't in the wave 3 on that point. But we're definitely not in wave 3 because, and this probably is the most important point, if this was wave 2 of the first impulse, right, of wave 3, right, because it's all fractal. Wave 3 is also constituted of 5 waves down if you're going down. This would not be able to exceed the 1618 of this, right? Because wave 2, we all know, falls between the 0.5 and the 0.618 of wave 1. So if you pull the fibs there, you see that we've already broken that. So this is not wave 3. This is not the subwave 2 of wave 3. We're still in the C wave correction, right? We're still in the 2-wave correction. And actually what we're going to do is, by pattern analysis, you see we formed an inverse head and shoulders. Let's just draw it out really quickly. Let's see. Okay, and actually I'm currently long on Bitcoin, but you all know that has nothing to do with my long-term kind of outlook. I've already shared that in the beginning of the video, but you know that I trade Elliott waves on short time frames, and I minimize my exposure. Low capital, high leverage, short time trades in between a scalp and a swing. But anyway, do you see that? And the target to this is pretty much at the top of this A, B. We're in a B wave coming back down for a C wave at the end. But I hope you all see that this is still the 2 correction, and that you can get 2 and 4 corrections, wave 2 and wave 4 corrections can take a while. And this is why price action, what am I looking for? I'm looking for here. No, here. That price action is typically in a correction. Actually, it spends less time in impulse and most time in a correction. So here we have the A wave, the B wave that's going to come up here because that target is up here somewhere, but it's still not going to violate the 618 of this 1 wave, okay? And then C, and that should be, if it's a simple correction, the end of your 2 wave correction. And after that, you should get a resumption of the downwards impulse in wave 3, okay? So that's what I'm seeing short time frame in Bitcoin. If you take the target of this inverse head and shoulders, you should get from the point of, I think the neckline's down here somewhere. So yeah, about this, something like that, around this origination point, right? It may slightly exceed the origination point here, at which point we're going to label, our 2 wave here at the highest point, right? But it cannot exceed the 618 of this 1 if this count is valid, right? But that's what I'm seeing. So basically, I'm long Bitcoin up until the top of this B wave, and then I'm going to start shorting it again at the top of this B wave. So that's my plan for the day. But once again, my macro view, if you zoom out, and this is always important, let me erase that. Oops. You got to keep perspective. We are in a downtrend, and it's as clear as day, okay? And those of people and analysts who say, no, this is a temporary thing, like, honestly, just look at the chart, zoom out on the monthly. You don't need any fancy Fibonacci. You don't need anything, any Elliott wave counts, and just look at the volume, look at the divergence on a high time frame chart, monthly or weekly, and then you'll know what's going on, okay? And a lot of times, people don't acknowledge things like that because it hurts. There's disbelief. Everything that they thought once was, everything that they planned for, all of the cash outs and all that stuff, things changed. But that's fine, and I understand that. This is not an easy game. This whole trading shit, this whole investing crypto stuff, it's not easy. I do not fault anybody for being wrong at any point in time. I've been wrong plenty of times, right? Trading is a bitch. You're in war with yourself. You're at war with everybody else in the market. It's not easy, right? So I have compassion for everyone who partakes in this in any capacity. All I'm saying is that when you look at it, it's quite clear what the charts are saying. So please, if you're listening to this, prepare. Don't be caught unawares. Do what you need to do. Make a mental plan for it, right? Nothing's 100%, but like the proof, what we have, the data is incontrovertible, really, okay? That's it for me for today. I hope this was helpful. Hope this was useful. Like, share, subscribe, and see you guys soon.